Greetings and thank you for joining us at futuremoneytrends.com. I'm here with the one guest that, believe me, this is the guy and this is the company you want to talk to right now. I'm not going to hold any punches back here, because if you're looking to add a digit to your net worth or make a significant leap forward in your own financial prosperity, none other than Rick Rule and Sprott Asset Management are the best people to talk to and work with right now. I am here with Rick Rule himself. Rick, thank you so much for joining us.
Always a pleasure. Thank you. Thank you. And thank you for that kind introduction.
Rick, there's so much to talk about what's going on in the precious metal market and the junior sector specifically. But before I do, I am going to go to Vancouver this summer. I believe the last week of July, I'm going to head out to your conference. And I've heard so many great things about your conference. But before, I start the interview, I want to kind of get your thoughts on, because I mean, you've been going to these for 30, 40 years now. What makes Sprott stand out? And if you don't mind me asking, to add on to that, the companies that are attending, does anyone get to go?
No, and that's part of the story. As you suggest, Dan, I have been speaking at and attending conferences for about 40 years. The Sprott conference was in fact put on by an affiliate of Agora, very close friends of ours for 20 or 21 years. And in the bear market that we all survived, the part of Agora that was running the conference really lost interest in natural resources, and they were going to abandon that conference after a very proud 20-year history. Some clients of ours urged us to resurrect the conference. They said it was an important part of their experience of being a Sprott client, an important part of the value that Sprott offered up relative to competing financial services firms. And at Sprott, as I think you know, Dan, ultimately the customer runs the show. We did, in fact, resurrect the conference, and as a consequence, wanted to put our own stamp on it. It was, at the time, before we took it on, I think, the finest high-end retail conference on the globe, but we wanted to continue to improve it. And to that end, we have been diligent ever since we have had it in circulating attendee questionnaire forms, exhibitor questionnaire forms, and speaker questionnaire forms, so that we got the opinion of every important constituent in the conference as to how we could improve the conference. And I'm delighted to say that an average of 5 or 6 ideas a year have been incorporated from all concerned to make the conference better. Attendees told us in particular that while most investment conferences consider the exhibitors to be advertisers, that is, that the qualifications to be an exhibitor at most investment conferences are a check that cashes and a pulse. Notice the order that I put them in. The attendees at conferences believe that the exhibitors represent investment opportunity, and hence our conference content, rather than being merely exhibitors. And that point of view was hammered home to us many, many, many times. The decision was made at Sprott that the way that we would segregate among the exhibitors who sought to participate in our conference was that every exhibitor, every public issuer at least, that is an exhibitor at the content, had to be owned by Sprott Inc. or in Sprott Inc. managed accounts. That doesn't mean that every exhibitor will end up being successful from an investment point of view. What it does mean is that every one of the exhibitors that presents will have been vetted by Sprott to the extent that we think that they are worth our own investment in. And I think that's an important part of the conference. The second part of the conference that I think is important is that while we bring on new speakers based on our interest in them, if the attendees don't agree with our assessment of the speaker, that is, if they rate low in content or low in education, they are dropped from the speaker's roster. We add new speakers based on input from our attendees. We delete old speakers based on response from attendees. And finally, the exhibitors themselves, given that they are content rather than merely advertisers, also have an input in the conference. The exhibitors, as well as anybody else, know about the nitty-gritty of capital markets and the process by which people learn about natural resource investments. So the exhibitors themselves have input as to the conference format and ways that we can facilitate the exchange between exhibitors and attendees, because the attendees have told us for many, many years that the ability to pick and choose among quality exhibitors and learn about them is one of the ways that they get value from the conference. Sorry for that wordy answer, but you asked me a very broad-ranging question.
No, and I look forward to being there. And just so everybody knows the specific date, it's either the 26th or the 20th of July, correct? Or
that's correct.
Okay, and
what 26th through the 29th inclusive.
Through the 29th. Okay. Yeah, and that is in Vancouver, Canada. I guess no better of a time to go to that show than last July, which I can't even imagine how the type of gains people have seen from buying those specific companies or the companies that you guys talk from the podium about. So the junior sector, go ahead.
It's funny that you mentioned that, because just today I got several emails from attendees last year talking about the high quality of the conference, but in particular the speculative results that they have achieved as a consequence of buying a well-selected group of attendees at market bottom pricing.
The junior sector right now, especially the high-quality names, they're on fire. I mean, the GDXJ doesn't give it justice what's happening to some of these very specific names. You're seeing 200, 300% gains. Essentially, I guess, Rick, is this what it feels like to not only be past the bottom, but to be at the birth of a bull market?
My friend Steve Sugarroot says that you make money in cyclical markets by buying something that is unloved. Check. That was us. Underowned. Check. That was us. But in an upturn, check. That is us. Interestingly, given the up move that we have enjoyed so far, from the point of view of a guy who holds a lot of these, it's wonderful. From the point of a guy who is a conference sponsor and wants to help attendees achieve maximum performance, my own preference would be that the market that we're involved in slow down a little bit, because as you point out, the stuff is up a lot. Now, it's important to note two things. One, markets don't go up interminably. The truth is that a bull market is always punctuated by backing and filling. That's normal, natural, and it's healthy. This is the kind of market that could easily fall in the interim by 20 or 30%. It's part of inhaling and exhaling, and is in fact healthy. It is important for you to convey to your listeners and readers that they need to be on guard for this potential slowdown. Mm-hmm. It's important because people's anticipation of the future is set by their experience in the immediate past, and people's experience in the immediate past with regards to resource stocks is catastrophic. And it might be that speculators would view a 25% or 30% retrenchment, which is in fact normal and natural, as being the beginning of a failure of the resource market, which I don't believe is true. Remember that these stocks, this index, fell by 50%, and then it fell by another 50%. And then for good measure, it fell by another 50%. This is a market that from top to bottom, measured by the index, fell 88% in nominal terms and more than 90% in real terms. The better names have doubled. They could come off easily, but remember, they have a long, long way to go over the next 4 or 5 years.
Well, I look at some of these companies that I'm aware of, that I follow, and they've built great companies over the past 4 years, and their share price, it's gone up 100, to 200%. But at the same point in time, they're still below their previous 2011 high when the Canadian dollar was par with the US dollar. And their companies are much, much better businesses at this point. So, without, of course, having these normal pullbacks, but for people who feel like they've missed the boat, I mean, just using a baseball analogy, are we at the national anthem? Are we at the bottom or top of the first?
Well, I think the key is in stock selection. I agree with everything you said, but it bears repeating, particularly when people are enthusiastic, as they are now, that probably 80% of the names on the TSXV have no redeeming features. Stock selection is really what it's all about. For investors who want to be passive participants in the sector, that is, for investors who don't want to spend at least 1 hour per month on every name in their portfolio, those investors should consider participating in an index that covers the sector, specifically, of course, ours, the SGDJ. The beauty of that is that it saves you the time that is necessary in terms of doing stock selection, because a factors-based ETF does that for you. But more importantly, because there is sufficient liquidity in the ETFs that to the extent that you want to trade the index, sell it when it's overbought, or sell it when it's overbought, yes, and purchase it when it's oversold, or to the extent that you want to use index options, that's available to you. You will not achieve the same result owning an index fund, even a factors-based index fund, that you will doing individual stock selection. But that presupposes that you, as an investor, are willing to spend at least 1 hour per month on every name you own. And this, of course, argues again for coming to the Sprott conference. There is no substitute for learning the craft from the masters of the craft, who will, of course, be speaking at the conference. There is no substitute for listening to people who built companies like Silver Wheaton or people like Robert Friedland, who will be presenting there, both talking about their companies, but also talking about the lessons that they have learned about investing in mining through building their own companies. There's no substitute for talking to the sophisticated investors who themselves will be attending and will be sources of knowledge. And there's no substitute for talking one-on-one with the CEOs of the companies that you have invested in or are going to be invested in. The amount of effort that you put into your portfolio is what will determine the success that you enjoy from your portfolio over the next 4 or 5 years.
Yeah, and I want to tell all my listeners, when you get a pick from a newsletter or you get a pick from, let's say, a financial advisor that is not in the Sprott group, you have to remember these people are absolutely they're biased in many ways. They are trying to create wealth for themselves outside of the actual investing in the junior resource space. For people like Rick and the people he has surrounded himself, like Robert Friedland and Ross Beatty, these guys are having fun. I mean, you guys have been very wealthy and very successful for many decades now. And when people write you guys a check and partner with you guys are doing this because you're having a great time. You want the people to make more money than you guys, percentage-wise. And I mean, I remember you told me one time that a lot of times you don't get to participate in the financings because the Sprott clients fill it first, correct?
By now, in virtually every case, we manage as a group about $10 billion. And the internal rules are that the pros are last. We always have more demand than we have supply. So in terms of my own participation, I invest in the same products like the Sprott, the junior ETF, and like the private equity and private debt funds at Sprott. And my own participation as an individual comes from my own participation at retail alongside my more sophisticated clients. And of course, from my ownership in the shares of Sprott Inc., which represents a substantial portion of my resource portfolio.
Rick, how much do you think the new silver Sprott offering had to do with this recent move we've seen in silver in April and May?
I think almost none. We raised about $75 million, which was a fairly substantial raise, given that it took us 6 or 7 hours overnight to do it. But the truth is that although there are shortages of physical silver in the retail market, the 30-gram product, the 100-gram product, that kind of thing, the physical silver market is still fairly well supplied. If you remember back to 2011, where we went out to raise $250 million and we came back with in excess of $600 million, that did a few things that spooked the market. One, the fact that we were able to raise so much money said something about demand for silver in the market. Two, the market got caught flat-footed. And three, the pros, knowing that the market got caught flat-footed, jammed themselves into the physical market knowing that it would go up. We were able to buy $75 million worth of silver, but we had conditioned the market to expect a raise, and we were told by the desk that bought the bullion for us that achieving a fill would represent between 2 and 4 minutes of responsible trading. What I think the $75 million number did do, what I think that the raise was able to do, is reaffirm for sophisticated investors that there is substantial unmet demand for silver. And in particular, there is substantial unmet demand for silver that's convenient to buy, that is not in physical form, but rather in certificated form. And further, among high net worth U.S. retail shareholders, there's substantial demand for silver in the form of a trust, where the capital gain that one will enjoy in a silver bull market will be taxed at the capital gains level as it is in the trust, rather than at the ordinary income tax level or collectible level that exists when you buy it as physical silver. I think that there was a realization on a lot of people's parts about the superiority, at least for U.S. retail investors, to A, own silver, but B, own silver in a trust certificate form on the New York Stock Exchange.
Rick, some of the most popular emails or frequent emails I get from subscribers is people are kind of left scratching their heads with the resource sector, stocks specifically, even more than stocks in general. Because, on paper, let's say 4 or 5 years ago, you look at QE, you look at the government data, economic recovery, you look at the bull market and the Dow Jones. It seemed like it was a really good setup for commodities, yet it was a horrible 4 years. And now here we are, people's worst fears. We're going back into recession likely. The QE is gone. However, the resource stocks are now doing great. So is it always just cyclical? Do the resource stocks and commodities, are they tied outside of major events? Are they tied to the economy, or is this just cyclical?
Remember that when you talk about natural resource stocks, you're talking about a broad spectrum. And even within the sector, they are not always correlated. An example would be industrial materials and energy. Those are broadly tied to the general economy. And one of the reasons why precious metals have broken out, but other materials haven't broken out, is that demand for precious metals, at least in one sense, reflects people's unease about the economy and unease about political settlements surrounding the economy. That has allowed precious metals to move up, while industrial materials, things like energy and base metals, have stayed soft as a consequence of people's fears that the recession that you're describing is true. I think we're in a very interesting setup across the commodity spectrum. I think that interest to the sector will be reintroduced by the precious metals, because the precious metals are responding to exactly the stimulus over the last 5 years that you have described. Zero interest rates would be an example. Accommodative fiscal policy, you and I might call it counterfeiting. The increase in debt, particularly at the government and consumer level, all of those things are beginning to manifest themselves in stronger precious metals prices. What I think is particularly interesting is that although I don't see a recovery in demand in the next 18 to 24 months driving the other natural resources commodities, industrial materials or energy, what I do see in those sectors is supply destruction. pricing of the commodity below the industry's median cost of production means that you take the excess supply and some of the baseline supply out of the market. It is possible to have a recovery in industrial material prices without an increase in demand as a consequence of the destruction of supply. That's a long process. It's a messy process, but you're beginning to see it work itself through the market now. And it seems to me that we have the chance 18 to 24 months from now to have a synchronized bull market in natural resources and precious metals, with precious metals having led, but with the industrial materials and base metals going higher, because supply destruction has meant that the industry isn't able to respond to price signals with more production. This is not necessarily a prediction, but if past is prologue, this is precisely the situation that we saw in 2002, the resolution of the last natural resources bear market.
Rick Rule of Sprott Asset Management. You can check them out at sprott.com. Please go to the conference, July 26th to the 29th. It's in Vancouver, home to really the junior resource sector, junior resource stocks. And I'll be there in attendance. I would love to meet you guys. And you have open access to some of the best people, actually not some of the best people in this entire sector at really an inflection point, a great year to really get serious about looking at this sector. Rick Rule, thank you so much for your time. You've been very generous. I really appreciate it.
Always a pleasure. Thank you. Look forward to seeing you there. It's a great city. It's going to be a great conference. I think you know, Dan. Ultimately, the customer runs the show. We did, in fact, resurrect the conference, and as a consequence, wanted to put our own stamp on it. It was, at the time, before we took it on, I think, the finest high-end retail conference on the globe, but we wanted to continue to improve it. And to that end, we have been diligent ever since we have had it in circulating attendee questionnaire forms, exhibitor questionnaire forms, and speaker questionnaire forms, so that we got the opinion of every important constituent in the conference as to how the conference was in fact put on by an affiliate of Agora, very close friends of ours for 20 or 21 years. And in the bear market that we all survived, the part of Agora that was running the conference really lost interest in natural resources, and they were going to abandon that conference after a very proud 20-year history. Some clients of ours urged us to resurrect the conference. They said it was an important part of their experience of being a Sprott client, an important part of the value that Sprott offered up relative to competing financial services firms. And at Sprott, as I think could improve the conference. And I'm delighted to say that an average of 5 or 6 ideas a year have been incorporated from all concerned to make the conference better. Attendees told us in particular that while most investment conferences consider the exhibitors to be advertisers, that is, that the qualifications to be an exhibitor at most investment conferences are a check that cashes and a pulse. Notice the order that I put them in. The attendees at conferences believe that the exhibitors represent investment opportunity, and hence our conference
going on in the precious metal market and the junior sector specifically. But before I do, I am going to go to Vancouver this summer. I believe the last week of July, I'm going to head out to your conference. And I've heard so many great things about your conference, but before, I start the interview, I want to kind of get your thoughts on, because I mean, you've been going to these for 30, 40 years now. What makes Sprott stand out? And if you don't mind me asking, to add on to that, the companies that are attending, does anyone get to go?
No, and that's part of the story. As you suggest, Dan, I have been speaking at and attending conferences for about 40 years. The Sprott.
Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with the one guest that, believe me, this is the guy and this is the company you want to talk to right now. I'm not going to hold any punches back here, because if you're looking to add a digit to your net worth or make a significant leap forward in your own financial prosperity, none other than Rick Rule and Sprott Asset Management are the best people to talk to and work with right now. I am here with Rick Rule himself. Rick, thank you so much for joining us.
Always a pleasure. Thank you. Thank you. And thank you for that kind introduction.
Rick, there's so much to talk about. What's